Good evening, everyone. I'm delighted to extend a warm welcome to all of you joining us today for this special webinar on the overview of Social Stock Exchange Annual Impact Report. It is truly an honor to have such a distinguished group of participants gathered here to understand the remarkable progress and achievements in the realm of social finance, impact investing, and social stock exchange. As we embark on this webinar journey today, I would like to welcome our eminent speaker for today's webinar, Shri Hemant Gupta ji. Hemant Gupta ji is the MD and CEO of DESI Investments, a platform with the mandate to invest in local infrastructure projects with local and state governments. After 26 years at Citi, one of the largest global financial powerhouses, where he worked in a variety of functions, including project management, technology, and operations in India and North America, he decided to swap a large corporate role for a more socially impactful role. His journey led him to head BSC Samman, which helps companies to do more effective CSR. From there, he went on to establish the Social Stock Exchange in India. He was a member of the working committee and the technical group constituted by the SEBI for setting up the Social Stock Exchange in India. He was also heading the Social Stock Exchange at BSC. He holds a management degree from IIM Calcutta and an engineering degree from IIT Madras. Over the course of today's session, we will delve in the findings and insights of Social Stock Exchange Annual Impact Report, which serves as a testament to the collective impact of our listed social enterprises and investors in addressing some of the most pressing social and environmental challenges of our time. Once again, I would like to extend our warmest welcome to each and every one of you. Thank you so much. Over to you, Hemant sir.
Thank you, Rangoli, for that generous introduction. And without further ado, let me get into this session. I'll start by sharing my screen. Okay, I hope all of you can see my screen.
Yes, sir.
Okay. So the way I've structured this session is that we'll spend a little bit talking about the social stock exchange itself for those of you who have not heard about it in the past or who want to refresh their memory. Then we'll get into the annual disclosures that NGOs and FPs are supposed to make, and specifically a little more time on the annual impact report, which is a part of the annual disclosures. There's a caveat I'd like to lay out before I get into this session. Some of the things that we'll be talking about have some unresolved questions, especially around things like the social impact assessment firm and some of the aspects around significance of projects, which Rangoli, Sandeep, and the team at ISAI has been diligently chasing the SEBI with. And in the course of this, if there are any further elaborations that they can do on these subjects, then they will. So let's start by jumping quickly into a small history of the social stock exchange in India. And I'll start by playing a video clip of the budget speech that Honorable Minister Sitharaman had given. Let me try playing.
So the audio is not there. I think there's some problem.
Okay, so we can skip that
We
part
can skip that part. Yeah.
Yeah. Okay. But as you must be knowing, the essence of her speech is given here, that it create a platform under the regulatory ambit of SEBI for listing social enterprises, by which she meant for-profit enterprises which engaged in the social impactful work, and voluntary organizations, in other words, not-for-profit organizations, for the realization of social welfare objective. And the important thing is that she left the means of raising funds fairly open-ended, unit equity, debt, or units, etc. Okay. So after the speech, which happened in July 2019, SEBI quickly got into the act and after some pre-consultation, they constituted a working group under the chairmanship of Shri Ishad Hussain. The working group submitted its report in June of 2020, and shortly thereafter, so the working committee basically focused more on the architecture. They looked at what had been done in other countries and kind of created a model that we felt it would work for the Indian condition. Subsequent to that, SEBI created the technical group, which focused more on the how. How will the social stock exchange work? And that again submitted their report in May of 2021. And after about a year, which was the time that SEBI took to make amendments to all the regulations, and the Ministry of Finance took to amend their regulations. Finally, in July of 2022, notifications started coming out for the framework for the social stock exchange. And subsequent to that, both the stock exchanges applied for their licenses, and BSC got its license in December of 2022, and NSC got its license in February of 2023. So, what did this working committee and the technical group specify in their reports? And again, these were reasonably voluminous reports. So, and kind of culled out some of the more important points for this session from those reports. So, the working committee essentially said that SSC should be a segment under the existing stock exchange. So, we are not creating a new platform. We'll let the stock exchanges create one more segment, like they have the SME segment or the commodities segment, a segment called the social stock exchange, and therefore inherit the governance and the technology infrastructure that has been time tested. Second, given that the stock exchanges or the capital markets are not something that social development organizations are very familiar with, set up a capacity building fund with the primary objective of building an ecosystem around the SSC. So therefore, building awareness, training people on how to leverage the SSC, specifically the NPOs or the NGOs, as well as donors and investors who want to give money on the social stock exchange. And third, because donations and grants are the most common way in which today funding happens for NGOs, creating a new instrument called zero coupon, zero principal, which is nothing but a donation or a grant. Zero coupon standing for you'll earn no interest on your money, and zero principal meaning you will not get your money back. So nothing but a donation or a grant. Okay. What the technical group did is it took the working committee report and converted, like I said, into the how. Specifically, they for our purposes, one is that they spoke about creating a criteria, eligibility criteria for the social stock exchange. Today, we don't have the definition of a social enterprise being provided in any statute or any regulation. So we kind of created a primacy of social intent as a precondition, which essentially focused on the fact that there is an identified list of sectors like health, education, skills, environment, etc. And you have to be working in those areas, and you have to have 2/3 of your work happening in those areas. Kind of created the crux of the eligibility. There are also some exclusions. Certain organizations cannot get into the social stock exchange. Right? I'm sure most of you are familiar with this part. Second, and this is where it gets more interesting for you guys as social impact assessors, that a social enterprise, just like a company listed on the stock exchange, has to make financial and other risk-related disclosures. The social enterprises, because they have raised money for creating a social impact, have to make social impact related disclosures. And to be able to have a third party validate those social impact related disclosures, the role of a social impact assessor, right? And allied to that social impact assessor, of course, is the creation of a self-regulatory organization or an SRO to ensure that social impact assessors have a code of conduct that they adhere to, and disciplinary action is taken against those who do not as well as laying the rules of the road for social impact assessors. So one of the SROs that has been formed is, of course, ISAI, which is conducting this webinar. And then there were other recommendations, including alteration of attributes of the social venture fund to make it more easy for uh, organizations to raise money. Right. So what happened subsequently is that it started out with the Ministry of Finance coming out on July 15th, regulation declaring the ZCZP as a security. And then that was followed in quick succession in about 3 or 4 months, 4 notifications and circulars by SEBI, essentially laying out the framework of the social stock exchange. And very recently, in December of last year, they came out with a set of amendments because based on feedback that was received from stakeholders, um, the SEBI has made some modifications to the framework to make it more easy for entities to get listed. Okay. And some terminology changes. As an example, the the so the social impact assessor used to be called a social auditor, which is why ISAI is the Institute of Social Auditors of India. That now has been changed to social impact assessor. Very briefly, the way the social stock exchange works is that, as I had mentioned earlier, you start by establishing primacy of social intent, and there's a laid down criteria for that. And then, depending on whether you're an NPO or an FPE, NPO standing for not for profit organization, FPE standing for profit enterprise, you follow different processes to come onto the SSC. For an FPE, since there is already an existing framework for commercial enterprises, you just follow the same method. So you list on the main board or on the SME or the startup segments, depending on your size. However, for an NPO or a not-for-profit organization, you register first, and then you can raise funds through ZCZP or SPFs or SIF, social venture funds or social impact funds. And the reason why this distinction was made is that an NGO typically will raise money at a program level or a project level, and they may want to raise money multiple times, right? So they may have some of the larger organizations have dozens of programs running for which they need to raise funds. So you register the organization once, and then you can do fundraising as many times as possible. Okay. So when the entity is raising funds, and we're going to focus on the ZCZP instrument, since that is the new instrument. Remember, the FPE follows the normal listing path. This is the one that was created new. So here, similar to the DRHP or the draft red herring prospectus, there is a draft fundraising document that forms the crux of the filing for a ZCZP issuance. And it has, the following sections that should be there. So, of course, the vision of the organization, the target segments, which areas, which geographies, which section of people or environment are being targeted by the organization, what is the strategy, how is the vision getting translated into an impactful operations, and what is the governance that is there to ensure that things are complied with, both from a regulatory viewpoint as well as from the vision and the mission viewpoint. So you'll notice this is a cascading down right from the vision downwards. Then the management, right? Who are the management? Where are the operations of the organization? The last 3 financial year statements, compliance reports, right? Audited reports, etc. This includes compliance, also includes any notices that may have been received by the organization. Then, of course, basic compliance of registration document, trust deed, etc. Now, then it comes to more program-specific documentation for which the funds are being raised. It's very important for a person who's reading the document to understand the history of the organization, to understand their track record, to ensure that the project for which funds are being raised, they have the ability to execute it. So a history of the social impact that the organization has created and what are the risks associated with the program, right? And what are the mitigants for the same. So once the entity has uh, registered, then they would list using the zero coupon zero principle process that we just went through, right? Now, as being on the social stock exchange requires the organization to make additional disclosures, right? And these are arranged, kind of simplified in this table that you see in front of you. There's a lot of detail behind this table. So if you really want to get into the nitty-gritty, you'll have to read the regulation. But in short, at registration time, uh, all of these things that are given have to be specified. On an annual basis, and we'll get into a little more detail on the annual report shortly. On a quarterly basis, there's nothing. If you're only registered, you've not raised any funds, but a statement of utilization of funds if you've raised funds. And any event that has a material impact on either the organization or the program has to be declared within 7 days of the event occurrence. And the annual report impact report is, of course, where we'll spend a bulk of our time today. You'll notice on the FPE side, apart from the event-based and the AIR, there's really no new things that have been done because there are existing adequate guidelines for commercial enterprises. Okay, so now let's get into the main topic for today's discussion, which is the annual disclosures and specifically the annual impact report, right? Now, the annual disclosures, and I'll just quickly go back to this slide. If you notice, the annual disclosures are there both for the ones that have only registered as well as the ones that have raised funds. I think one of the questions that had been there sent to us had been that whether it's only for those who are registered or for those who have raised funds. So the answer is it's applicable for both. If you're registered, you need to make these disclosures. And if you're listed also, you need to make these disclosures. And as we go through, wherever there's a distinction, we'll also highlight the distinction between the two. Okay. So the annual disclosures are broadly broken up into a few sections, and we go through these sections. To my mind, these sections are reasonably self-explanatory. I think SEBI has done a reasonably good job in terms of specifying these sections. So name, location, vision, mission, organization goal, outreach, scale of operations, right? And these metrics are the scale, top 5 donors or investors for a for-profit, top 5 programs or interventions, ownership and legal structure, governance structure, details of governing body like a board of governors or a trust, key executives with key responsibilities, a number of meetings of the governing body, along with attendance, right, organization level potential risks and mitigation plans, related party transactions. Some of this stuff will be very familiar to you guys, right? Any ethics, any conflict of interest, remuneration policies, stakeholder grievances, number of grievances received and resolved, compliance management, and of course, always registration certificates and other licenses and certifications. Then, so broad general aspects, and then governance aspects, and then financial aspects. Of course, this has the balance sheet, the income statement, etc., and the auditor's report. Now, the challenge here, a guidance note is brought. So, so all of this actually is specified. If I go back, sorry about this. So, this September 19th circular, right? This specifies all of this in great detail. And there have been some slight modifications to it in the December 28th circular, but by and large, September 19th circular holds good for this information. So more details can be gotten from that September circular. Now, the interesting thing here is that this needs to be done within 60 days of the financial year end. Okay, which for NGOs can be a challenge because normally under the current, if you're not on the social stock exchange, you have till September end to get your accounts audited. So, of course, being on the stock exchange, you do need to adhere to higher compliance norms. Okay. Okay. So the second thing that we spoke about, apart from the annual disclosures, is an annual impact report, right? And this is where the role of a social impact assessor also comes in. This annual impact report, given that it may involve field visits and there may be projects happening not in the nearby vicinity, has got a little more period. You have 90 days from the end of the financial year, and essentially, the AIR captures the qualitative and quantitative aspects of social impact generated. By its very name, you would understand that it's an impact report, right? And this is to be submitted by both entities that have registered on the social stock exchange and not raised funds, as well as by those that have raised funds. And we'll talk about what is the distinction between these two. So in case an NPO is only registered without listing any security, the impact report needs to cover the significant activities, right? And you also have to specify, so SEBI has not said that there is a set method of determining significance. You have to determine the significance as the NPO. You have to decide what is a significant activity as per you and disclose that in the annual report. The reason why this is important, and I'm spending a little bit of time on this, is that ultimately, when a investor or a donor is coming onto the social stock exchange and wanting to either invest in a program or donate money to a program, depending on what kind of organization it is, they will look at your track record, right? Now, the fundraising document has track record, which may be limited in its scope, but the annual impact report has a much wider scope. It covers the entire organization. And it actually acts as a showcase of the track record of the enterprise, right? So therefore, it's important that the annual impact report includes all those programs or projects which you think are significant and needs to be shown to a potential donor or investor into your organization, right? So it's important, which is why SEBI has left it free for the organization. But it's important for you to decide within your governing body as to which are the programs that is important enough or significant enough to demonstrate the track record of the impact you're creating. So please be careful in selecting which programs you're including in your AIR. Right, and of course, this is what I was saying, that if you're listed also, the next point, if you're listed also, then of course the program for which you have raised funds has to appear in your annual impact report. In case of a social impact fund, so remember, a social impact fund is like a mutual fund, but for the social stock exchange. So social impact fund essentially invests money into securities listed on the social stock exchange. So a social impact fund also needs to create an annual impact report. And there in the annual impact report, they have to cover all the social enterprises who are recipients of funds from this impact fund. Okay. The AIR shall be audited by the social impact assessors. And the social enterprise shall disclose the report of the social in the AIR. So the impact assessors report has to accompany the annual impact report. Okay. What we'll do now is get into the actual content of the annual report. So I was basically talking about it from a concept point of view. Now let's get into the actual content of the annual impact report. And again, it's the top-down approach. You start at the highest level of the organization and you slowly go down, right? And once again, so from a strategic intent or planning perspective, what is the social or environmental challenge that the organization or the instrument listed is addressing? And has that changed in the last 1 year? How is the organization tackling this particular challenge or planning to tackle it? And has again that approach, has that changed? And in the work that you've done in the past, who has been impacted along three dimensions: income dimension, geography dimension, and thematic dimension, right? And if there are any deviations to your target segment, you have to disclose out also. Okay. And what would be the, so in the approach that you're taking to address this particular challenge, what are the positive as well as negative or unintended outcomes that have happened and you anticipate will happen? And then there is this concept of a theory of change. What are the inputs? What are the outputs and what are the outcomes? Right. So you have to create a table which lays out your theory of change or a logic model framework that says this is the inputs that we gave. These inputs resulted in these outputs, and that those outputs created the outcomes that are given. Right. And I hope you guys understand the difference between an output and outcome. Okay. Second section is what is your approach? Right. So what was your baseline status when you started the project? What has been the performance in the 1 year, right? What is the implementation plan? Has there been material change in the implementation plan, right? How is your work aligned with the SDGs? Are you talking to your stakeholders, right? Getting feedback from them? What are they saying about this? Um, and in the last 1 year, what are the biggest risks that you've seen in the achievement of your impact, and how are you mitigating them? So, it covers everything from are you measuring what you're planning to do all the way to what are the risks that are being addressed as a part of your project. Then the scorecard, the impact scorecard. Right? Again, a lot of this is left to the organization. What are the metrics? What are you monitoring? What are the trends? Right? How much is in your reach? Right? It is quite possible that some of your target segment may reject your solution. How many people or what proportion of the target segment has accepted your solution? Right? How much of the program has been achieved, cumulative reach, other suitable metrics. Okay. So some of the inclusion parameters like diversity, inclusion, social equity, right? Then as same impact scorecard continuing, mention the key highlights, achievements, challenges, narratives of impact on the target segment. Actually examples of some of the work that has happened, feedback, validation, surveys that you may have done, right? Some of the examples that of questions that these surveys or the validation process can address is that if this intervention had not happened, then what would have been the end state, right? Um, because this intervention has happened, what are the changes that have happened? Also, very importantly, what are the unintended consequences of this activity? It could be negative, it could be positive, but they focus on the negative. But I think there are also sometimes unintended positive impacts that happened. I think those also should get mentioned in the impact scorecard. And last but not the least, remember we spoke about quarterly. A statement of utilization of funds is to be submitted. Right? And this is to be done, by the way, within 45 days of the end of the quarter. So this broadly, so let me just go back to the disclosure page. Yeah, here. Okay. So what we did is in a very short order, in perhaps a little too fast, we've gone over the disclosures that need to be made for an entity, an NGO that is registered, for an NGO that is listed, and for an FP that is listed. And what I've focused on are the two things that have changed or have been introduced new. One is the annual disclosure that have to be made, and the second is the annual impact report. Uh, the social impact assessor's role obviously is very important in the annual impact report because it's all about impact. And your job as impact assessor is to validate the impact that has been created. But I think one of the things that I would strongly recommend to both the NGOs and to you guys is that because you need to be able, so unlike a financial audit, which is a point in time audit, right? An impact assessment is actually a continuous process. So you can actually say December 31st, 2023, this was the impact, right? But that's not a very effective way of measuring impact or tracking impact, right? My recommendation would be that you actually stay with the program. Stay with the program right from the beginning when the baseline is being done. Figure out, work with the organization to ensure the right metrics are being baselined and are getting tracked. Independent processes are being set up to measure those metrics that remove any kind of bias or any kind of chance of numbers being changed. And make sure that if required, and create a plan as to how those metrics should evolve if your program goes as per plan. And in case there are issues that crop up during the progress of the program, then metrics and the program are changed to ensure that the desired impact is getting created. Which is why I'm stressing on the fact that a social impact assessor has to be there throughout the program and not just at a particular point in time when the report has to happen. Okay. What I'm going to do now is stop sharing the screen. And I think we have a whole host of questions that have come in. To my mind, the question and answer session is an equally important and interesting part of the discussion. So I'm going to shift to the question and answers now. Just give me one moment as I pull up the question. Okay. So the first question we have is from Radha Rani Gupta. She says, we have registered our organization under BSc SSC during the financial year 23-24. However, we have not listed for ZCZP security as yet. As per SEBI notification, disclosure of annual impact report by all social enterprises which have registered or raised funds using SSC, social enterprises have to provide duly audited annual report within 90 days of end of financial year. Please confirm. First question, even there is no listing on BSc SSC, just due to having registration, we need to appoint the social auditor. The answer to that question is yes. And the reason why it's yes is because you do need to submit the annual impact report, and the annual impact report, the social impact assessor has a very important role to play. Which projects we need to get audited while there is no fund raised from BSc SSC? I had tried to address this question. Remember, so let me see if I can go back to sharing my screen. Okay. So here in point number 2 on your screen, right, the AIR must cover NPO's significant activities, interventions, programs, or projects from the year. This language is from the regulation itself. Methodology for determination of significance must be explained. So remember what I said, the AIR is your method of demonstrating your track record. It is what people will use in future to decide whether to put money into your programs or not. And SEBI has left it up to you to decide which programs to include or not, right? You have to decide as an organization what is important and put all of that in your AIR. Okay, I hope that answered that question. Okay, what are the consequences if any registered SSC without raising funds does not comply these provisions as applicable in the given time of 90 days from the end of the financial year? Any non-compliance, and this is one of the non-compliances, any non-compliance with the extent regulations will result in your registration getting cancelled. The registration getting cancelled has two consequences. One is the fact that you will not be able to raise funds because fundraising or listing requires a valid registration. And the second is that it will appear in your track record as having your registration getting cancelled. And even if it gets reinstated, it's quite possible that somebody may view this cancellation in a negative way. So my suggestion is, if possible, try and comply, especially if you're looking to raise funds in the future from the social stock exchange. Okay, so that was the question from Radha Rani Gupta. Then second question is a more complex one, and I'm actually going to ask the ISAI team to answer parts of this. So this is a question from Ramesh Swami of Unnati. Ramesh and Unnati are the first one that raised funds. Okay. There is a mention, social auditors are available. Many have passed the exam and gotten themselves certified. There is a mention of a social audit for a registered firm, even if listing is not done as per clause. Is this right? That is correct. It is right. The NGO has many projects going on, many verticals, let's say childcare, elderly care, etc. When registered, all the projects of the organizations are mentioned and details. What has the social impact report to cover? So we spoke about significant projects. The cost of covering all the projects could be huge, which is right. The time taken could be huge. They may never list a particular project because they don't require funds. What should be the approach? I think we discussed this question. Pick significant projects where you need to demonstrate track record, because tomorrow you may want to raise funds in that particular segment, right? Of course, you can't predict everything for the future, but you do your best guess. And as a part of the AIR, you also specify how you selected the project. What is the timeline for submission of financials for a registered NDO? As a listed NGO, it is 60 days. The timeline for registered and listed is the same. It is 60 days. Financials within 60 days is a nightmare for an NGO. It is not going to be easy. What happens if a registered NGO fails their timelines and submissions? I completely agree with you. Like I had mentioned, today there is a time period of 6 months or 180 days that needs to be crunched to 60 days, which will be a nightmare. So I think we need to make representations to SEBI through the advisory committee, and you can access members of the advisory committee online. That this is something which is going to be a problem, which is a problem actually, because annual reports are already due, and therefore SEBI needs to provide some leeway on this. But I completely agree. What happens if a registered NDO does not submit a social impact report or any other submissions within the timeline? I think I answered this question of non-compliance. The registration is only for 1 year. It needs to be renewed every year. Does this mean that if an NGO does not submit, the registration is cancelled? What are the repercussions? Yes, of course, if you don't renew your registrations, it will get cancelled. And again, we spoke about repercussions of cancellation of registration earlier. Okay. Next question. Rangoli and all, I hope I'm not going too fast, right? It's okay.
It's fine. It's fine.
It's fine. Okay. Next question. We have registered our organization on SSC and it says our case is approved, but have not received further communications from BSC. What shall we do next? And also where to contact for guidance for the same? Unfortunately, I'm no longer a part of BSC. I wish I could help directly. But on the BSC SSC website, there are contact numbers and email addresses. You should definitely write to them and escalate your case. if you have a social impact assessor who's registered with ISAI, perhaps their social impact assessor can also contact ISAI. They can help, although I'm not very sure about that one. So your best approach right now is to continue contacting the BSc SSC. I actually don't know what else to say. When I was at BSc, we did have a tight tracking of turnaround times of the registration process and the listing process. And I think that should still be in place. So if you escalate it, you should get a response. Also, I'm not sure where you're seeing your cases approved. If you're appearing in the list of registered NGOs on the BSc SSC portal, then you should be getting a registration certificate to that effect. So you should follow up with the BSc team. They're your best bet. Okay. Okay. We have some more questions. Even there is no listing on BSc SSC, just due to having registration BSc SSC, we need to appoint a social auditor. So first, let me confirm or clarify rather. This is not something that BSc SSC is requiring. This is something SEBI, as a regulatory body, wants the stock exchanges to do. Right? That's the first thing. The second is that the need for a social auditor comes from having to submit an annual impact report. So because you are required to submit an annual impact report, even if you're only registered, you will need to appoint a social auditor or social impact assessor. Okay. I hope that clarifies. Which projects we need to get audited while there is no fund raised on the BSc SSC? Again, same thing. We answered this before. Significant projects, decide on significant projects based on where you see future fundraising happening and your best projects. So people who tomorrow want to give funds to you have understand the impact you guys are creating as well as possible. What are the consequences? Any registered does not comply these provisions? We spoke about this. You'll get cancelled. Respected sir, any format is available for annual disclosure and social impact assessment report. Let me see. I think the circular has these. Just give me 1 second, guys. Let me see if I can show you the circular from September 19th. Okay, where did it go? Yeah, here. So this is the September 19th circular that lays out the framework. And as a part of this, so this is the registration section. Again, zero coupon, zero principal. Let's go to the annual. Yes, here is the annual disclosure. So this is the annual disclosure section, right? I'm not going to, I think we've gone through this, so I'll not stop. I just wanted to show you something. A guidance note is provided in Annexure 1. So if you go to Annexure 1 of the same document, you'll see more details, okay? And same thing, this is the annual report, item D, annual impact report. Here again, this section gives details that we went through, approach, impact scorecard, right? And there's an Annexure 2 that provides more details. In the interest of time, I'm going to just quickly go to those Annexure 1. This is Annexure 1, and it says name of organization, registered name. So it provides a full detail of, and wherever there are tables required, what data needs to be provided. So September 19th circular, for all of you who are registered with ISAI, I'm sure you can ask them if you can't get a copy of the circular, but you can find it on the SEBI website. Okay. Okay. Next question. Social impact assessment is expensive. Which NGOs are reluctant to bear? What be done in this? Okay, it's a very good question, and it's a very relevant question. I'm not sure about this, and maybe I say I can follow up on this one. But the capacity building fund, you remember we spoke about setting up this fund to help the social stock exchange gain traction. If I remember right, the capacity building fund has set aside some money to help people with the social impact assessment business, at least the initial ones. Um, and as more and more impact assessors get qualified and certified, these costs should come down. But I think they were going to help the first few NGOs with subsidizing the social impact assessment cost. But Rangoli, if you don't mind, just making a note of this and checking with the capacity building fund folks
Yes, sir.
on this one.
Yes.
Okay. Next question. Should the social impact assessors be a firm or can they be an individual? So the certification and the registration happens at an individual level, but the actual social impact report, assessment report that is attached to the annual impact report can only be given by a firm and not by an individual. And again, the circular will give you more details on this. Uh, so you have to not only if you're a social impact assessor, not only is it important for you to get your certificate from NISM and register yourself with an SRO like ISAI, but you also need to join a social impact assessment firm. And there is some open questions around the social impact assessment firm that I know the team at ISAI has been chasing up with SEBI. But you'll need to, the short answer to your question is you'll need to be a part of a social impact assessment firm. If a trust is wanting to get itself registered, listed on the social exchange, and if it has lineage towards any mutt, uh, will that be a negative for the trust from a donor perspective? Hmm. So one of the so religious organizations are barred from the social stock exchange. So if your work involves working with a particular religion or community, you anyway may have problems getting registered on the social stock exchange. Okay. But if your work involves multiple communities, um, and not just one particular religion or community or a mutt, then they will not be a problem. Right. So I hope that answers that question. The social impact assessment study by independent assessors are costly. Is there any guidelines in terms of the fees as most of the NGOs cannot afford? Again, I think Rangoli, you guys are going to follow up on this one and come back. Yeah.
Yes, sir.
I am heading as treasurer in an NGO. I am a qualified assessor. Can I do the annual impact assessment? So you're a treasurer of an NGO and you want to do the impact assessment for the same NGO. I don't know. I don't think that's a good idea. I think the assessor has to be an independent entity. And as the treasurer of that NGO, you would not be an independent entity. So I would recommend you do the impact assessment for other NGOs, not for your own. Any social impact fund has been listed until now. There are a few. I think there are not many. Okay? I think there's 6 or 7 social impact funds that have been listed so far. And I think all of them are closed-ended funds. There are no open listings right now of things you can subscribe to. But I know that at least 2 entities are talking about social impact fund, their social impact fund getting listed. Okay, next question. That's a long one. The annual impact report shall be audited by a social audit firm employing a social auditor. Oh, oh, actually, you've just pulled out the regulatory section. Yeah, sure. So, okay, let me read it because I think it's important for the others also. The annual impact report shall be audited by a social audit firm employing social auditors. So this is what I was saying earlier, that an individual cannot give an audit report on an annual impact report. A firm has to give a annual impact report. Social audit firms mean any entity which has employed social auditors and has a track record of minimum 3 years for conducting social impact assessment. Okay, that's clear enough. These firms shall employ social auditors who have qualified a certification exam conducted by NSM, which at least the social impact assessors amongst you would have done by now. Social auditors will be required to be empaneled with an SRO under ICAI as a separate sustainability directorate. So that SRO is ISAI, Institute of Social Auditors of India, and I'm hoping all of you are registered with ISAI. This clearly implies that an individual, though having requisite qualifications, cannot be appointed as an impact assessor. Is this corrected? Yes. The firm has to be, the social audit firm has to be appointed as the impact assessor, not the individual. Sir, appointment of social impact assessor is to be informed to SSC before social impact assessment? No. There's no requirement to inform the SSC of appointment of social impact assessor. Is there any monetary penalty for non-compliance? As of now, there's no monetary penalty. Your registration will get cancelled. Can implementing agency also issue ATG certificate under income tax in addition to compliance under CSR company right? I think the ATG question is still open, Narangoli. I don't think that
Yes, sir.
approval has come.
Yes, sir. It's still open.
Yeah, we had hoped it could have come with this budget, but again, it's not come.
Mm.
So
Neither
as of now,
ATG nor CSR nor
yes,
FCR.
yeah. Kindly let us know whether the funds documents issued by BSc, SSC, NPOs, EG, BS, Unnati Foundation. Yes. So the NPOs that have listed, so as an example, the SGBS Unnati Foundation were successfully subscribed. And I hope you guys know the definition of a successful subscription, right? It is at least 75% of the issue size should be subscribed to. What is the size of investment that can be raised? Any thresholds? I don't know whether this question is coming from the NPO point of view or a for-profit point of view. I'll answer both. For-profit point of view, depending on your size and your liquidity requirements, you will go either into the startup segment or the SME segment or the main board. Each of these has their own regulation on what is the size of investment that can be raised. If you're an FPE and you're looking to list on the stock exchange, it's best that you talk to a merchant banker who will be able to help you with that. If you're an NPO, then the size has been specified in the regulation itself. It used to be 1 crore. I think that 1 crore now has been reduced to 50 lakhs. That's the minimum amount of money that you can raise. Okay. Next question. Can funds be raised not for a program or a project, but for ongoing capex replacement by a hospital trust? So yeah, so this is one of the interesting things with the social stock exchange, right? The social stock exchange has no restrictions on why the money needs to be raised. What will it be used for, as long as it is in one of the 16 sectors, right? So in your case, your question relates to capex replacement by a hospital trust, which is under the category of health, which is a permitted sector on the social stock exchange. So the social stock exchange has no restriction on only OPEX, only CAPEX, 1 year duration, 3 year duration. It has none of those CSR related restrictions. So you can raise money for CAPEX also, replacement. However, the thing with the stock exchange, remember, the stock exchange does not give you funds, right? The stock exchange is only a platform on which you can invite funders to give you funds. So therefore, if there are investors out there or donors out there who are willing to give you money for capex replacement based on your track record, based on they feel that this money will be utilized well, yes, it can be raised on the social stock exchange. Have any social impact assessments firms been registered? Rangoli, you have an answer to this one?
No, sir. As of now, no firms have been registered with us. We are yet to seek clarification from SEBI, and as soon as we are clarified, we'll go further. As
Okay.
of now, there's no update on this.
Okay. Can a person registered with the ISAI or ICI as social auditor can be a social auditor for an NGO for social audit report purposes? Yes. But remember, again, you have to distinguish between a social auditor and a social audit firm. The report can be issued only by a firm, not by an auditor. So therefore, you'll have to join a firm, and the firm can issue the report. Can a practicing chartered accountant firm have a registered ISA member as a partner conduct social impact assessment? Again, the qualification is that it has to be a social impact assessment firm, right? It's not enough that you're a practicing chartered accountant firm. And read the regulation on what qualifies as a social audit firm. And I'll read it again from previous questions. Social audit firms means any entity which has employed social auditors and has a track record of minimum 3 years for conducting social impact assessments. These firms shall employ social auditors who have qualified a certification exam conducted by NSM and will be required to be empaneled with an SRO under ICI. Okay. So it's not enough that you're a practicing chartered accountant firm. You have to comply with the other parts of the regulation. Do social auditors have to give signed and stamped report? Yes, with membership number. Yes, of course you do. That's an interesting question. Why would you ask? And the requirement of 3-year track record for social audit firms would be difficult as the regulations have just been announced. Is this correct? Yes, it is correct. Is there a website where list of such firms and contact details are available? We just spoke. No such firms have been registered for precisely this reason. The 3-year track record being the bottleneck, and that is what ISAI has gone back to SEBI and sought clarification as to how exactly will any firm comply with this 3-year timeline. But SEBI has not yet shed light on this. Would that be a correct statement, Rangoli?
We are in the process of seeking this clarification,
Yeah.
and as of now, we have not received any clarification. The leadership is there in touch with the SEBI, and we'll get back to the participants soon.
Okay. That was the Shruti. Any more questions? One more. So who will be signing the AIRs
This
if
is the
no firm?
last question.
Okay.
21st.
So who will be signing the AIRs if no firm has been registered? Yes, that is why we are seeking these clarifications from SEBI, because we need to register firms so they can start signing these AIRs. Yeah, that's exactly the point. Absolutely spot on. Okay, I think that was the last question. Thank you very much. I hope you found this particular session informative and useful. There are a few open items, like I had mentioned right in the beginning of the webinar also. And I think we are working diligently on getting to the bottom of those open items with SEBI. We'll keep you posted. I will keep you posted on how those things progress. The ISI website also has contact details in case you have any further clarifications you need. So you should get in touch with them. Right. I'll hand it back to Rangoli at this point.
Thank you so much, sir, for such a knowledge enriching session. And I hope the participants are well equipped with the new term, And on behalf of Institute of Social Auditors of India, I would like to thank you, sir, for taking out your valuable time for us. Thank you so much. Thank you.
Sure, it's
Thanks to all the participants also.
Yeah, it's always a pleasure. Thank you, guys.
Thank you
Bye.
so much.